Hello and welcome to the Road to Autonomy. I'm your host, Grayson Brulte. The Road to Autonomy is brought to you in part by Stantec Generation AV. Stantec Generation AV combines some of the most experienced AV experts in the industry with the resources of a global engineering firm. Stantec Generation AV provides education, consulting, assessment, and guidance to any industry interested in autonomous vehicles. Learn more at stantec.com. Hello and welcome to the Road to Autonomy. I'm your host, Grayson Brulte. On today's episode, we're absolutely honored to have Reilly Brennan, General Partner, Trucks VC. Welcome to the podcast, Reilly.
Grayson, thank you so much for having me on. Really appreciate it.
I'm really excited to have you here because you run a great fund. More importantly, you run an interesting Twitter account. You always have your fingers on the tips of innovation, new things that are emerging. And now you've traditionally had your things on the tip of new emerging technologies, but we're about to go through a period of consolidation here. A lot of investments are going to get wiped out when consolidation comes into autonomy. How are you preparing for that consolidation?
It's an interesting point because I suppose the commercial part of AVs now might feel a little old because it arguably, I would say it started with the acquisition of Cruise by General Motors in the spring of 2016. So if you've been following along, now we're 6 years past that point, which feels like a cycle of time. I would actually argue there's been 2 cycles in AV. So in terms of the long span of history, it's a short period, but I suppose we have been a part of it since the very beginning. So I'm maybe one of those old masters, like some sort of white-haired gentleman that you'd see in a painting or something like that, ready to be put out to pasture.
I don't know about that. You can, if you want to go that, you got a Leonardo da Vinci, or if you want to go, to Greek mythology, you could say that you're Zeus.
I'm going to tell my wife that after we wrap up this podcast. I'm going to tell her, see if she's impressed by that, and if she would agree. Probably not. I will say that this is a period of consolidation because you have essentially a lot of the robo-taxi ideas turned into commercial applications, probably around logistics and parcels and things like that. In fact, we've seen founders who started many years ago with robo-taxi, then moved into logistics, and then moved even closer to sort of a more focused idea in doing specific fruit picking on farms and things like that. So what that tells you is these ideas kind of like to be structured in this era. And although the dreams of autonomy were, I think the media told us it was always about robo-taxi 5 or 6 years ago. That is not something that I believed, but there were a handful of robo-taxi acquisitions and things like that. The era we're in is just indicative of the fact that a lot of people are waking up to these large vertical structure markets, which I tend to love: ag, mining, construction, logistics, maritime, aviation. And so robo-taxi is but one of those. And I think that the narrative has always been that was the only one. And I disagree with that.
I don't see how robo-taxi in traditional sense are going to make money. You have 2 investments. One you've successfully exited with Bear Flag, and congratulations to Gino and the crew over there for selling to John Deere. That was a good one in ag. And then you have Gatik, which seemingly owns the middle mile. Did you see those 2 investments as companies that were focused on solving a problem in autonomy where there was a clear path to building a sustainable business?
Yeah, and those 2 companies were not pivots from robo-taxi. They started in the beginning with those specific markets in mind. There's another one in our portfolio called Telio, which has been focused on first really construction and mining, as more of a focus on mining, and they use autonomy and teleoperation. There's actually, if you go through the trucks portfolio, and right now we've invested about a little over 50 companies over 6 years, probably about 15 of them have an autonomy aspect to them in some way or another. But yeah, I mean, the great thing about the structured routes, for example, ag, is you can deploy it today. You can find customers today and make money from it today. Whereas I think a lot of the generalized robotaxi concepts needed billions of dollars, a decade or more. And even then, the payback period for that vehicle versus an Uber with a driver was, hard to make that work. So yeah, we love those environments, the structured route environments.
And then from the Deere side, Deere, before acquiring Bear Flag, Lee Redden's Blue River. and they combine the precision ag with the autonomy of Bear Flag. Now, and they've got the great Deere tractor. Now you've got an incredible asset that you can go sell to your customers. Deere just seems to be putting all the pieces together, and they're going into electrification now. What are your thoughts on the ag market as it relates to what Deere's doing?
One interesting part about that, and I think, Grayson, you and I have chatted about this briefly over the last few years, is that I've often thought that those industrial categories from an investment perspective were really fascinating for a few reasons. And kind of from an economic point of view, none of the big industrial categories have yet fallen victim to the idea that they can build everything themselves. And what I mean by that is a lot of the automotive companies over the last 5 or 6 years have tried to build out large engineering efforts to do automated vehicles. And so they haven't really made a lot of big acquisitions in the last few years in autonomy because they believed, hey, I've already hired 3,000 AV engineers. Why am I going to go buy this company for $50 million or $500 million or whatever it is? Whereas the industrial categories actually have taken a different tact, which is to say, let's say I'm AGCO or CNH or Deere or Komatsu or any of these large industrial companies that makes big equipment like that. They know that they're not going to snap their fingers and hire 2,000 product engineers who used to work at Waymo. And so their approach to autonomy has really been through an M&A lens. They've really said, let's go find a great company with great engineers and go buy it. And I think, at least from a VC perspective, that's a very important thing you need to keep in mind, that these markets, not only are they attractive because they're large markets, but the buyers for those startups are actually much more willing to do M&A right now, as opposed to the automobile market, which frankly has already built out a lot of resources. That's not to say that they won't, but it's a different era.
It's a very valid point because like the supporting companies for the Caterpillars, the large mine, the BHP, they're supported by architecture and engineering firms. And those firms have historically grown by acquisitions. Oh, there's a new firm specializing in, say, water. Okay, let's buy them, add them to the practice. So it's something that industry is used to. So let's Rio Tinto, for example, they knocked out bonkers, all-time profitability, companies flying on the iron ore. They announced a $7.7 billion cash dividend to shareholders. Do we see a Rio Tinto spitting off that amount of cash or BHP Billiton acquire one of these companies and kind of try and integrate autonomy into the mine to further increase their profit margins?
No doubt. Electrification and AV to those specific players is as much on their mind as the way you'd think about DHL, UPS, Amazon, et cetera, adding autonomy and electrification to theirs. It's just a component of how they make money or will make more money in the future. This is one of these things too, where today, if you look at the number of startups in mining and construction who focus on electrification in AV, there's very few. I mean, there's really only about a handful. I would argue Telio is the best of those, but even if you took maybe another 2 or 3 other startups, we would all agree that there are very few. Whereas in 2016, I can tell you the number of robo-taxi startups was in the dozens. And it felt like we were meeting a new robo-taxi startup probably every day in 2016. And it's not like that in these categories. So what's fascinating is I think we've seen founders who used to build in generalized robotaxi and automobiles move into these. And I hope we see more because the opportunity is really great.
The opportunity is huge because the global miners and the refiners are under massive ESG sustainability. They have to do it. They're under the gun. At autonomy electrification, you can help them meet their ESG goals. It might not be a sexy market, but it's a highly profitable market. Does that appeal? Do these founders look and say, wait a second, highly profitable market, whoa, this is a sexy market? Is that they're kind of drawing toward the limelight, not towards the nitty gritty?
I think for the founders that I've met who have moved from on-road to off-road autonomy, one of the most compelling, and there are a handful of compelling features, no passengers, which has safety sort of implications. Also, no passengers to demand you get to a destination in 7 minutes as opposed to 8 minutes, right? So one of the sort of value props of a lot of these things is the ability to stop the vehicle, to slow down, to restart. You could never do that if you were running a taxi service for passengers. They would immediately leave. So not to mention the fact in off public roads, you don't necessarily have the same set of regulatory environment. So when founders realize that, I think they actually get super excited. They would describe mining and ag and logistics as sexy compared to a lot of the complexities of the on-road robotaxi market.
Is cost a determining factor holding back? If you're going to get a giant CAT or a Mitsu, they're expensive to acquire. You need land to test them. Is it all let's call it the traditional infrastructure needs that are needed to test and build a product that kind of acts as a deterrent?
In some ways, yes. I think the get up and running part of sort of an ag business in autonomy is a little bit higher in the very beginning. It's actually well suited for, frankly, areas outside the Bay Area. Pretty quickly, Bear Flag was doing testing in the valley, but then moved across the bay where they could access more land. I think that a lot of these highly structured off-road applications are perfect examples of where an entrepreneur could build something outside of really high-cost areas like the Bay Area. Perhaps in Michigan or Indiana, it would be good for things like ag or trucking, et cetera. So there's some initial startup costs which are a little bit different, but it tends to actually have a simplified sensor suite because you usually are only concerned with what's in front of the vehicle, usually not what's behind it too much. Yeah, so it's a little bit of a different cost thing, but it hasn't been too much of a problem for the ones I've seen. And as you probably have been picking up, Grayson, on the fundraising market, it feels like seed rounds have been growing so much, so that hasn't necessarily been a concern for some of the teams that have at least raised a little bit of money.
And if you go to Indiana, you have just outside Indianapolis, you have Cummins, and they're going through a mess of the CEO just did an interview with Forbes about the transformation towards electrification. And that becomes an interesting place. You look at Iowa or Nebraska for farmland, you have a lot of land to. Is it access to not necessarily financial capital, but personnel capital, where an individual that understands the farm, the nuances, all the little, like you race, you understand all the nuances that go into performing the right turn. Is that kind of an access to getting those individuals to understand how a farm works on the team to buy into the vision?
It's an excellent point because when we started making investments at trucks, when my partners Jeff and Kate and I started the fund 6-7 years ago now, we would see founders who were attacking problems with really only a robotics team in place who probably didn't have much market intelligence or market experience before they started the company. I think that era is actually behind us now. And whether we're talking about maritime or ag, the last couple years of great startups we've seen, they've always had a market person on the team. They've attracted somebody who wants to work at a startup. And frankly, that's not something that people would have been able to do 5 years ago, 6 years ago, because first of all, startups and autonomy in 2015, it wasn't clear if I was trying to convince you to leave your job at Maersk or, one of these big farms that it was even a good idea. Now, by the way, it might still not be a good idea today, but at least there's the perception that there's some big ideas that are still out there and that founders can truly change those big markets. So we've seen people from large entities willing to leave a job at UPS or DHL to go be the sort of market intelligence lead on one of these specific startups.
You're seeing a lot of that in the autonomous trucking space. There's a lot of traditional individuals that grew up in the trucking industry that are in leadership positions, and you're seeing those companies are pulling to the front of the pack in trucking because they have the guidance.
Right. Trucking has also, perhaps unlike the robotaxi companies, it's such a web of partnerships, from the vehicles to the routes, the customers, sometimes the powertrain companies. So it's pretty remarkable. If you run a AV logistics company, the partnership dynamics are more vital in that type of an organization than they are probably in any other robotics autonomy company out there today.
I fully agree with that. And if you look at partnerships, I'm going to go out there. I've said it on Twitter. I've said it publicly. Anybody listen to me, I'm going to go on the record and say it here on the podcast. A railroad will buy an autonomous trucking company at some point in the next 18 to 24 months. Railroads fundamentally understand policy. They understand efficiency, and they understand partnerships. Am I onto something here?
Well, I do think that it's interesting. I guess a different way to approach this would be we will likely see a kind of intermodal use of autonomy. And it could be that there's a firm that wants to buy a yard robotics company, take Outrider, for example. We're not an investor in them, but I will say that there's some interesting things you can do at a port or in a yard, which support trucking, which support rail. And I believe that it's likely you'll see an acquisition for a company like that. Whether if a rail company is going to buy like a Too Simple or a Gatik, I don't know about that, but it's an interesting thing to come back to in 2024 to see if you're right.
Well, we'll have you back on that because I started studying rail maps around the United States of where the tracks go. There's several gaps of where cargo goes from the 100 to 300 mile gap where there's not rail. So if you run the numbers of what it's going to cost to lay track all the political hurdles you're going to have to go through, it's much more efficient to add that autonomous truck to go that 300 miles and extend your rail. The autonomous trucks combined with the railroad, now you're going to squeeze the J.B. Hunts, the Warners of the world. You're going to get a bigger percentage of the freight market. You got Union Pacific announced a $7 billion buyback the other day on their earnings call. They're spitting off cash. Now they can say, well, we're going to increase the efficiency. We're going to increase the railroad. That's a great message to sell to Wall Street. Plus, they have the free cash flow to fund the development of the autonomous technology at the same time. And they got the freight to move.
I'm with you. However, I will say that historically, markets have had a problem with trucking companies that want to do rail and rail companies that want to do trucking. I think that we're also in this era where markets appear to be rewarding pure play ideas. This company equals electric cars. This company equals ESG fuel. And it would be interesting. It would be counter to what we've seen in the last few decades for that to happen. But you're a man of contrast, Grayson. So I'm willing to go along and bet with you.
There's no doubt the market likes pure plays. We're seeing it with the breakup of GE into 3 companies. However, the autonomous trucking companies don't generate the revenue that a railroad generates. So I think that could be a different defining factor. Plus, there's synergies there. Just look at the growth of e-commerce, the growth of shipping becomes pretty interesting. So we never know. And then we go back in the Wayback Machine. Union Pacific built Sun Valley. They started as a passenger rail and they owned hotels. The gentleman started Orient Express. They owned a shipping company, and then they built the Orient Express portfolio before they sold it to Belmont, Louis Vuitton, Moet Hennessy. So there's some really interesting bedfellows in that space that we can look to history to guide us. Look at it, staying on the Louis Vuitton maritime thing for a minute, are you seeing any interesting new technologies, investments in the maritime space that you're really geeked out and excited about?
We are. There's one we're working on right now that I don't have the liberty to disclose, but I will say that we've seen a handful of autonomy approaches in maritime. Some have been building, small craft specifically to pull in weather data and routing data. So think about, for example, Saildrone. We're not an investor in Saildrone, but they make their own little boat that goes around and I think is mostly open water stuff. There's other companies that we've seen that put sensors on buoys, some that put sensors really at a port and are measuring sort of like local depths and things like that. There's also a need for better hydrography, just mapping of waterways, not only out in the middle of huge paths and routes in the ocean, but closer to ports. And there's actually a good amount of movement at ports, which most people don't appreciate, but the depths within ports can change so much that it impacts how much payload you can take. And so there are a huge amount, there's a lot of opportunity there. And, our firm Trucks, we say we're funding the entrepreneurs who are building the future of transportation. Admittedly, we haven't done a lot on the water, over 50 investments. Most of it has either been, on the ground or in the air with aviation and space. But I will say in the last 12 months, we've seen definitely a big number of maritime on autonomy and robotic startups that we never saw in the first few years.
Mapping of underwater is interesting. So across the lake from where I am is the port of Palm Beach, and they're dredging it now because the sands are shifting. And you have on each side, it's very shallow. And then in the middle, it goes down to about 38, 40 feet, depending on the sands. And you have to have a pilot boat that has to escort the big Tropicana ships in and out all the time. And so if you create a digital map that updates in real time, that becomes really interesting because now you could optimize that route. You could put more cargo through that if you go to the Port of Everglades or you go to various other ports, Savannah. That's interesting.
It is. You've probably seen this before, but those pilot captains, they make a good amount of money. They're in high demand. There's not that many of them who Tropicana is willing to entrust their large container ship to. And so it's a high paid, sort of a high risk thing in giving those pilots tools to make not only their job easier, but also to change the load profile of those ships. It could mean quite a lot. So yeah, there's a lot of opportunity there. I also think this is interesting because, Grayson, you and I have probably been transportation geeks our whole life, but don't you feel that in the last 24 months, as supply chains have really hit every component of life, that now more people are interested in the nerdy stuff that we've always cared about?
Absolutely. I've been to more dinner parties and cocktail parties where the word supply chain comes up. And then that leads to an inflation conversation where never had it before.
And perhaps, and hopefully down the road, it won't be on the front of mind of everybody, but it does feel like we've had so many people, at least in my world, who have asked about trucking and logistics and ports and things like this, who 5 years ago didn't care at all.
When will autonomous trucks be able to enter ports? Because while there's not a large amount of capacity today, they could make a little bit of difference of helping to shore up the supply chain, but yet they're not even willing to talk. And I'm a proud member of CAFE, the California for Freight Innovation. When do we get past that hurdle? Say you're having a negative economic impact on society by not allowing this technology to come there.
Well, it's different in the U.S. and Europe. In Europe, you have can't speak to all components of Asia, but I will say in Europe, you have much more federal control over those spaces. Whereas in the U.S., you could say it's more localized, and so the amount of control and the amount of say you have over who can enter or not enter those areas isn't necessarily a federal decision. And so this comes back to the discussion we were having earlier, which is the partnership dynamics of autonomous trucking is arguably one of the most important parts of the business. And in fact, we've seen some of the logistics companies take investment from entities that own or have access to those ports for that specific reason. And so it's a fundamental question that I don't think there's any one company, even Waymo, that can lay claim to a leadership position for those specific pickup points. And that's a big opportunity. In fact, it's probably more important than saying you're running 10,000 trips a day on this route in Texas. If somebody came to us and said, I've secured the access to these specific vital ports in the United States, I think that's actually saying something a great deal. Maybe our friend Jeff Brandis can help us with that.
Jeff is all about it. There are ports in Florida that are not unionized that are welcome to autonomous trucking. We just have to get the trucks here. You bring up the valid point around Waymo, do 10,000 trips or secure access to move from ports. A majority of the press releases coming out of Waymo, the public statements today, are around the trucking practice. The Waymo, the passenger business doesn't get nearly as much attention as the trucking business does. At some point, does Waymo split them in two? Or do they keep them fully integrated since they're two completely different businesses when you look at the business models and the economics of them?
That is a great question because I guess whenever I'm for example, when I'm in San Francisco, I see Waymo Jaguars all the time. Around the truck's office is near South Park in San Francisco. And so they're running loops through there all day long. So my perception in San Francisco is that it's fundamentally a robo-taxi company. But I think it's right to say that elsewhere, and particularly in the perception around the media, is that they've tried to focus more on the commercial side. It's always been a kind of a question in my mind whether we were at the point in this era of autonomy where you could have a multi-silhouette autonomy company. And most of them have moved from one to the other and have generally not done, multi-silhouette kind of thing where you're doing trucks and middle mile and robo-taxi and small things. So that's a great question. I don't know is my answer to you. I still think that Waymo is going to try to have a market entry point in robo-taxi first. And the trucking piece of it probably would be compelling to work as a separate company. I guess I have a lot of questions in my mind about just the overall strategic sort of direction of Waymo in the year or so since John Krafcik left. And I still think that they're fundamentally the leader, because of the amount of engineering work, patents, the amount of investment. But I do wonder about the sort of long-term vision of where they want to be in 10 years, for example.
It's a great point that John's not there. But one thing that Waymo has going for them that nobody else has, they have the Alphabet ATM machine. It's incredible how much cash Alphabet spits off. And it's amazing that Ruth Port, their CFO, just keeps giving them money to fund Waymo. So if I'm sitting there and we'll just use what the Wall Street term, other bets.
I do feel that potentially breaking them out is a signal that they're becoming closer to commercialization. And maybe that's part of their game plan. I do feel that right now, it's funny because maybe 5 years ago or 6 years ago, most of those Deloitte and McKinsey decks around autonomy were so heavily focused on robo-taxi and not on trucking. Now it seems it's gone the other direction. And so, if anything, I think it would be really interesting to see what the value of Waymo's trucking entity was on its own, potentially going public. It's a great question. I do feel that particularly the number of Waymo alums we've seen go into other companies, whether they're startups or larger entities. I feel like there's so much great talent that's gone through the doors of Waymo that's come in and come out and frankly still remains at Waymo. It's just an amazing, in some ways, inspiring company with their commitment to this project literally over a decade. And not a lot of other companies have had the stomach for that. So I commend them for that.
Makes Waymo special. I'll go on the limb based on current market conditions, the sell-off and growth companies. I'll give you two ranges: a $10 to $12 billion valuation for the trucking, and like an $8 to $11 billion valuation, depending on where the market currently sits.
For passenger?
For trucking. I
would say that's on the low side for the trucking business.
Just based on the market caps. So Waymo has the incredible, I don't know what word to use. You want to call it the incredible ability or the thankfulness or the awesomeness of the Alphabet leadership to continue to fund this. And they could pretty much fund it indefinitely if that's what management chooses to do. On the other hand, you have Aurora that's publicly traded. They don't have the Alphabet piggy bank to keep them going, and they're trying to do both. Has Aurora bitten off too much to chew?
I'm not an Aurora investor. Great team. I do think it's interesting that, the first sort of generation of Aurora, was clearly more about robo-taxi, and they've made this migration to logistics and trucking, which is a smart move. But you brought up something to me in our notes before this call, which I hadn't thought about, which is that Aurora still actually has a focus on robo-taxi for some of their, I don't know if it's safe to say development or some of their narrative. I hadn't thought about that. I actually had fully in my mind had made the religious conversion that they're only doing trucking. So, and maybe I'm out of step with reality on that. So I guess for the companies that don't have a Google as a supporter and investor, I think you probably have to pick one thing you're going to be world-class in. And maybe at some point Aurora does that. I think that it's an unbelievably talented team at Aurora with great retention of talent. I know some of our startups have tried to hire Aurora people and have been unsuccessful in that. So I think there's a lot of amazing engineers there that we'd love to steal, but we haven't been able to.
Perhaps you can, because if you look at Aurora's ownership, according to Refinitiv data, 46.81% of Aurora is owned by Uber. Kevin Gay goes back to Uber. He's now in the role of head of safety for autonomous mobility and delivery. Does Uber, they don't want to own it anymore. Do they try and merge it into a Toyota or to another asset? And then an exclusive contract will run it on the network, and then Aurora can then lose that asset and just purely focus on trucking? Because when you just do a simple Bloomberg terminal search on Aurora, you got the FedEx partnership, you got the US Express partnership. It's trucking. You mention here, mention there of the passenger business, but it kind of seems like it's fallen by the wayside. And just, looking at it from an analyst perspective, it just seems that the market is viewing Aurora as a autonomous trucking company, not as a passenger and autonomous trucking company.
That's probably where maybe I'm reading it through that lens as well. What's fascinating though is that a lot of the assets that Aurora took on or were invested as a result of, the Uber ATG going to them, a lot of that was about the robotaxi business as well as trucking. So I think it's an interesting junction they might be at. You might be pointing to something that they have to decide on relatively soon that I hadn't considered. But the market at the moment, and I believe for probably the next 5 years, is going to think about a lot of these non-Waymo AV companies as really being about trucking. I'm really fascinated to see what Aurora makes of that duality, which I admit I really hadn't thought about that too much.
Because if you look at the passenger, to me, it's a 3-horse race. It's Waymo, Argo, Cruise. One of those is going to emerge in the robo-passenger space, and will do well. Perhaps all three will emerge. That's the I'll call the 3 horsemen if you want to use that. And looking at that kind of leaves Aurora just floating out there. You don't have Alphabet's ATM machine, which I said. So I'm going to go back and look at their acquisition of ATG. Will that turn out to be a long-term strategic blunder, that they made a mistake acquiring that asset?
No, because I mean the engineers that have gone in to Aurora no doubt have helped what they're doing in trucking side, and also the investment from Uber itself. So I wouldn't say that. I do think that the description of those 3 companies is probably indicative of a North American focus, because if we were to include the world, I think we'd have to include Baidu somewhere near the top. And I also would make an argument that in the United States, the sort of little engine that's worth mentioning is May Mobility, which has actually done more autonomous rides than a lot of those companies on far fewer budget in cities that aren't San Francisco or New York City, but is quite meaningful. So I do think that the landscape has shifted a lot, but I would include those other 2 companies.
What's Edwin's end game at May? Where does he ultimately want to be?
He wants to be in a lot of communities running AV service in a structured way. So I think that the difference between a May and, let's take, for example, the original robo-taxi aspirations of Waymo, is those companies really fundamentally wanted to have a large map and say, hey, you can open up an app, click a button, get a ride to really any address. And that is why I think the robo-taxi dream has mostly been unrealized for a lot of those companies. They have a very small map. And Ed Olson approach at May Mobility has always been that, which is to say, let's pick routes that our partner really wants us to do. In their case, it's either a business or a government. And we'll just run those routes and we'll make them essentially trunk lines of autonomy. So it's a different focus. It's admittedly smaller than the whole world on purpose. So that's it. And, May has a big partnership with Toyota, big investment, and there's more to come with that in the future that I know they're excited about.
Then is May Voyage 2.0?
I think May is May as it's always been, frankly. I mean, one of the amazing things about May is that it's really had the same vision since it started, and it hasn't tried to go into VTOLs and a bunch of like insane ideas that one startup company shouldn't take on. It's always been doing the same thing. The difference maybe in the last few years is that they moved away from small NEV shuttles into doing Toyota and Lexus vehicles. So the first version of May was with these Polaris GEM vehicles, which is what a lot of robotaxi startups in 2015-16 used to get going. And they've just moved to automotive grade platforms. That's the only fundamental change. The difference between May and Voyage, I think, is that Voyage was, from my perspective, always trying to do these kind of closed environments like a retirement center, which I think potentially are great businesses. May has always wanted to do these in cities, smaller cities, but in cities not in the villages, for example. At least they haven't wanted to date. So I think the interesting part for May specifically would be, does May want to do other silhouettes beyond the Lexus SUVs? So would they potentially want to go into things that are commercial related? And they haven't to date. It's really fundamentally been about passenger carrying trips. They haven't done anything in commercial. So one of the question marks, I think, for May, given that they're one of the very few startups that's still independent, has raised, frankly, in the scheme of the other players out there, not a lot of money. What are the opportunities in front of them the next 5 to 10 years? You could make an argument that the commercial space is a great opportunity for May if they wanted to go into it, but they haven't done that yet. We were, the first investor in May. I was the first board member. I'm a board observer now. I'm no longer on the board of May, but have a lot of respect for Ed, and obviously we're really happy with our investment.
So if May looks to expand, I'll throw out one here to you. How about to and from airports for pickup and drop-offs from airports? Does that fit into their model?
Right now, if it's carrying passengers on structured routes in cities, then yes, that would be a great potential next vector for May that could make really good use of the vehicles I have as well. So it's a very good idea that I can assure you has come up a few times in discussions internally too.
How come more AV passenger companies haven't looked at the opportunity around airports? If you go from airport to resort, airport to hotels, and I'm not talking running in New York City, running in, say, Scottsdale or the resort towns around the United States where there tends to be, or Jackson Hole in the summer, Wyoming, where there's less traffic and there's small airports. How come nobody's gone there? Because you know this about me. It's a captive high net worth audience that you can charge for an experience.
It's also 30 to 40% of Uber's business. So if you look at Uber's rides and why Uber was down so much in the early days of the pandemic, it's because not the majority, but a huge portion of Uber rides are to and from airports. So I agree with you 100%. I think those structured routes are potentially really great. The issue with some airports is that you'd have to only give rides to passengers who are going within a specific map. So there's some airports that are close to city centers where it might be really appropriate. And others, for example, let's say the Detroit airport, where you're 40 minutes from the suburbs, and you might not want to have such an expansive map to take a passenger from DTW to Rochester Hills, which could be an hour-long trip. That might not be something that a structured route company wants to take right now.
That's a valid point. There's also smaller ones. You look at Aspen from the Pinkerton Airport to downtown Aspen. That's a short jump. I wouldn't do it in the winter, but in the summer, which is when they're becoming a high season for them, that's another interesting. Or the East Hampton Airport to East Hampton or to Sag Harbor. There's fixed routes there.
I think one of the issues with that, however, with those is that they're not circuits. So you have a utilization problem at the end of that trip where you say, okay, now I've taken this passenger to a particular area. If it's not a city center, it's not a circuit trip, and so you have a deadhead mile. One of the good things about circuit loops for May specifically is that there's enough density in a city circuit that you're always picking up or dropping off, which makes the business a lot better. So you get into these different dynamics around the economics of it, but I agree with you that could be a great structured route.
Well, you might not get a circuit loop. There's a very good chance you might get an investor or a chairman of a company that wants to acquire you on that route just because of where you're running.
You could have a friend of Grayson, no doubt, in Aspen taking that route.
You never know. You're looking at the autonomy market. You're investing throughout the future of transportation. You mentioned maritime, but where are you currently looking to deploy capital?
The answer is really great founders who are in potentially large markets. I'm constantly amazed at all the new components of the transportation business that we didn't realize. And they're frankly huge markets that are sitting ducks for opportunity. So the most recent one, which I'll describe, is just from the marketplace for battery recycling, which, we've done probably in the last 2 years. We've done 4 or 5 investments around the battery ecosystem. And recycling as a marketplace is fascinating because in some parts of the world, reusing a battery is a more efficient and economically a better path than recycling. So recycling, what I mean by that is you're fundamentally breaking down the battery. You might be using different materials or components. Reusing it could be reuse it in another vehicle or for grid storage. And right now, across the world, depending on where you source the battery, the reuse versus recycle is actually different in different markets. And so a company we invest in called Kling Systems out of Sweden is doing that. They're building a marketplace, which is trying to connect buyers and sellers and also manage the logistics, because moving a battery from one country to another is actually quite complicated because of hazmat regulations and customs. And so sometimes the logistics cost of moving a battery are just as much as the battery itself. And the buyers in that ecosystem think about logistics costs the same way that you and I would think about e-commerce, which is to say, when you buy something online right now, you probably are heavily influenced by the shipping cost or time to get that pair of shoes to you or that appliance. And trust me, the battery buyer is doing the same thing, except their cost basis is much higher on the shipping side. So it's just a good example of, man, I really don't know a whole lot about all these components of transportation, and it's so much fun to have a founder show them to you. So, my partners, Jeff and Kate and I, and my colleague Paneeth, when we look at companies, we tend to not really look for ideas. We kind of just wait for great founders to reveal something to us, and then we get on board. So I don't like going out and shopping for, hey, I'm out there looking for a new radar company. That tends to lead to, frankly, to bad outcomes for us when we have done that in the past.
That's a very valid point because you're signaling to the market, and I could just imagine you get, every Tom, Dick, and Harry showing up with their goods and their wares. Hey, look at this! We're the best widget. Hey, I'm PT Barnum. I got sales skills. Look at this. I can imagine the stuff you have to sift through.
Well, I guess what it does is you tend to want to confirm your own great ideas. So if you and I came up with a great startup idea, let's say it was some sort of VTOL that delivered tacos, and we thought that was the greatest startup idea anybody's come up with, I can tell you the first person to walk in our office to pitch that idea to us, we'd probably say, look at these geniuses. They've come up with the right idea. And it would cloud us in a way from thinking about, are these the right founders? Is this the right this or that? So we just tend to make better decisions when it's a great founder revealing an idea to us. And that's usually where we've made more money. And that's what we like to do.
God bless you for being a capitalist. So thank you for being open and honest. What a venture capitalist is a capitalist. It's your job to make money for yourself and to make money for your LPs.
That is what we're supposed to do.
Kling Systems, have they opened you up to the world of the circular economy and track and trace as you kind of look going down the battery supply chain with all the human rights issues, the energy, the issues, all the carbon issues? Have they kind of started to educate you down in that world and how that's starting to get cleaned up now?
Yeah. And in fact, I think one of the things we'll see is to take a step back. If you and I were to make some material out of plastic, let's say we sold laundry detergent and we put it in a particular type of plastic jug. In certain governments, in certain areas of the world, we would have to have a plan and, in fact, a tax or a payment to figure out how to recycle that plastic jug at the end of its life. What's just utterly amazing about the battery market and about electric vehicles today is you don't have to do that. But I think that's going to change quite quickly. What I mean by that is today you can sell an EV in most parts of the world with no godly plan for what you're going to do with the battery at the end of its life, which is amazing if you think about it. All the components in that pack and all the potential hazardous material and all the work that's gone in to get the pack to you. And so Kling specifically is at the forefront of a lot of conversations with governments to say, hey, when you sell that new BMW electric vehicle, you should have a plan. And specifically, Kling would make the case in the future, not today, but in the future, that we will contract with you to have an appropriate plan to put that battery into a marketplace, to then recycle the battery or to find a buyer for it, or to do some plan with it that is aligned with some government's idea of what battery recycling should be. We do not have that for electric vehicles. Will we have that within the decade? Absolutely.
Because that opens up the investment opportunities in the circular economy.
You know what's interesting about that, Grayson, is a lot of the recycling startups that we've seen, take, for example, Redwood Materials. When it started by J.B. Straubel, one of the Tesla co-founders, or you could say just an early executive if he wasn't a co-founder. When he started Redwood Materials, I think a lot of people thought this is a recycling company, like I'm used to going to my recycling center and seeing them break down things. And really what Redwood Materials has become is a supplier of materials. So the recycling business is really to get access to things that then they could turn into widgets that they can sell. So as opposed to your local recycling center, which doesn't have any, earthly goal to make soda cans, they just want to recycle them. Redwood is a different approach. And so I think a lot of these recycling companies are actually going to be suppliers of cathodes, for example. And this is just a really interesting decade for that. And we're going to see a lot of change there.
When they supply those cathodes, that puts Redwood and their peers or competitors in a very interesting circumstance. Then you can make the national security argument around energy independence. And that comes with all sorts of goodies from their front.
I agree. I think right now, I don't know if it's automotive news, but there's some entity that can tell you what's the most American-made vehicle because of the origin of those parts. It's always interesting, by the way, because sometimes the most American-made vehicle is actually a Hyundai or a Toyota or something like that, you know. But nevertheless, we have generally had these measurements for the total vehicle components. What we haven't seen in the battery marketplace is something like that for country of origin, for the entire pack. That is what we need to eventually measure so that we can get to potentially something that's all North America or all US-based supply, which we're quite far away from today.
We're getting there. Circular out of London, they're doing that with Volvo and the Polestar 2 now. And so there's big headways being made. There's no doubt that the future of this is going to be track and trace. It's going to be around the origin. It's going to be how much carbon, because the consumers are going to put pressure on the auto companies to disclose. And I think the one thing that the auto industry is not prepared for, consumers are going to want real-time data. They're not going to want a printout PDF. They're going to want to know, okay, I want to see this thing in real time. I can see where the FedEx is on the route. I can see where the Amazon package is on the route. Why can't I see the ESG that you did for this? That's going to put a lot of pressure on the traditional automotive companies that, frankly, I don't think they're ready for yet.
I think that, what's fascinating about that is you need enough measurement, and then you need enough sort of support for that measurement to enter the mind of the consumer. What it might also lead us down the road of is smaller battery packs. We have made this cultural decision in the United States that we need 300 to 400 mile range for all the cars we buy. By the way, that's in high contrast to Asia and Europe, where you have much smaller battery packs and you have much more frequent charging. In the United States, people really believe you can't sell a passenger car EV for under a 200 mile range. I believe that the thing you're pointing to, Grayson, is that we will have measurement of some of these components which are tied to ESG, which ultimately say to us and the consumer, gosh, you really don't need to have that huge pack. You could have a 40 kilowatt hour pack and you do this much charging and you're going to be much better. Now, another way to approach that is you have better management of the pack. So we have a startup called Zetara, which does battery management systems. And one of the fascinating components of good battery management is you can actually spec a smaller pack if you use the battery more effectively. This is particularly acute in the world of satellites and space, where you're usually over-speccing the battery. Basically, you're building a bigger battery than you need. And in the space industry, your weight costs are directly going to relate to your launch costs. And so all the things you're trying to take up in space, if you can reduce that by a little bit, you're going to save so much. You're going to make much more money for the operator. So that world is really fascinating. They're basically saying, wow, if we use this battery more effectively, we can put a smaller pack in here. And eventually that stuff's going to come to bear on the automobile market as well.
That's a really interesting analogy. Do you think it's the range anxiety that consumers face today and the lack of reliable uptime EV charging infrastructure? Do you think those are two factors that's leading to that?
It's a combination of, it's a really big country. We have always had a Swiss Army knife belief that our vehicles should have the capability of doing way more than we really need. And I think it's a measurement of the consumer had this belief that there wasn't enough in the way of available chargers for them. You know as well as I do that most consumers tend to just charge at home every few days if they have a single family home with access with a point in their garage. And I think that the fascinating thing is as the perception of more chargers goes up, in fact, I don't even think you need to use them, where the perception will change as the visibility of those chargers goes up. Then you might be willing to accept a smaller pack down the road. So I think that shipping a car these like a Lucid, for example, I think it's important for them to get off the ground to show they have the capabilities of this enormous pack that can go, from New York to Chicago or something like that. But is that actually where the direction of the market? I really don't think so. I think it's actually going to head the other direction.
If the market heads the other direction, in theory, the price of the vehicle should go down. Will that actually transpire? Will they look at that as a way to increase their profit margins?
That is the argument for the European BEV market today is, why are those cars so much cheaper? Because the consumer has really accepted culturally that they don't need as big of a battery pack. It necessarily so. There's so much regulation going into not only offering BEVs, but having consumers really buy them, that they've had to go to a lower cost as a result of that, a lower pack. I don't think many consumers today will accept a smaller pack if they can afford more. until we get to a breakthrough product which has a smaller pack and is a better driving experience. So I would make the argument today that the most interesting EVs and the most quote unquote exciting EVs are fundamentally heavier cars than we've ever had. And I think that there's a lack of vision by product designers to date to come up with a great product which is lighter, has a smaller pack. So for example, if I was running the R&D team at Toyota or GM or Ford, and I had all these engineers at the proving ground, I would say, can you come up with a breakthrough vehicle that weighs 2,500 pounds, that's electric? It can have a short range. It doesn't have to go 500 miles. It can go 50 miles. But if it's an unbelievable experience, there is room for a new product like that we have not yet seen. That's not a new 911 or a new Mustang. I'm talking about a brand new silhouette and a brand new name that we haven't seen. That is one of the most compelling product opportunities out there today.
I like that because in resort towns it replaces the Mokes, which only go 20 miles an hour, just have a simple battery. Somebody should put a lithium ion in a battery. So anybody from Mokes listening, sign me up if you put a lithium ion in it. Or a golf cart in resort communities. That's an interesting market. So then do you price that sub 20, 25,000? Is that what you're looking at for a price point there?
I don't know if it should be cost targeted. I think it should be experience targeted. So even if you charge 911 money, but you weight a third of the weight of a 911, you could actually get there. And I think one of the fascinating things which electric vehicles demand is that we will need to have breakthrough products that are actually lower in curb weight than their ICE alternatives. Right now, we have a good argument for, over the long run, cost of ownership can be better, ESG can be better, depending on the power source you're putting into the battery. I would make an argument that the weight must come down in a new breakthrough product. Think of what, for example, if you've ever seen a Lotus sports car, a Lotus is great. In fact, there was this great video that Jason Camisa just did on Haggerty, and he said, a great sports car isn't great because of the amount of horsepower it has, but the amount of pounds it doesn't weigh. And I think that what a fascinating mission for a new EV from any of these brands. It's out there for the taking.
I like that. Experience targeted. I think you're on to something there. It's all about the experience at the end of the day.
They can be really fun, but they don't have to be heavy. And I think most of the great EVs right now are really heavy. And some of them necessarily are going to be heavy because they're large SUVs or something like that. But there's this other world that's out there for lightweight EVs that don't need big range. If I said to you, you should drive this thing, it's the most exciting car I've ever been in, you wouldn't say to me, well, I'm not interested because I can't go to Chicago. You would say, hand me the keys. I can't wait to drive it.
That's a really great way to wrap up here. And as we look to wrap up this conversation, it's been insightful. We've gone all over the map. What would you like the listeners to take away with them?
I think that working in transportation is one of the great challenges and opportunities of our lifetime. So what a wonderful place to spend your life's work to deal with these issues around policy, design, business, engineering, computer science. It's such a fascinating space. If you choose to build a startup in the space, I'd ask that you remember us and you go to trucks.vc or write me an email at rpb@trucks.vc. And we'd love to meet you and hear what you're working on.
For those founders that are looking for a VC, Reilly is more than a VC. He's a great partner. They do incredible research. So it's not just capital. It's strategic capital that could open a lot of doors and do good for your company, because the future is bright, the future is autonomous, and the future is investable. Reilly, thank you so much for coming on the Road to Autonomy today.
Thanks, Grayson. Really appreciate it.
You too. Thank you. Thank you for listening to the Road to Autonomy podcast. If you've enjoyed listening, please rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter at Road to Autonomy or email podcast@brulteco.com. The Road to Autonomy is produced by Brulte & Company. The views and opinions expressed on the Road to Autonomy podcast do not necessarily reflect the views and opinions of Brulte & Company. The content discussed on this podcast is for informational purposes only and should not be taken as legal, tax, investment, or business advice.